Hello everyone, welcome back. This is class 11 accountancy basic accounting terms. See, since you are very new to the accounting subject, right? So you should know some basic words, basic terms in the accounting subject. Then only when you learn the subject detail, no, this words, this concept will help you to understand the subject very well. Okay? So that's why we are learning basic accounting terms first. So here we'll see the first slide here. Entity. So entity means an economic unit which may be business entity or non-business entity. See, economic unit means what? It's money involved in it. That's why it's called economic unit. See, let's see the business entity. Business entity means an economic unit which is formed for earning income. See, let's imagine you are running an electrical shop. That is one business entity, okay? And your friend is running a restaurant, and another friend is running textile shop. This all it's a business entity. Why they are doing this business? To earn money, right? So your electrical shop is the business entity. It's an economic unit as well. Understood, right? So you are running a business to earn money. That is business entity. So electrical shop is one entity, restaurant is one entity. Here, so for example, supermarket, car showroom. This all called business entity. And non-business entity. What is non-business entity here? See, which entities are called not for profit, such as clubs, charitable organization, and public library. This all called non-business entity. See this government library, government hospital, government school, they are running for the service, right? They are not earning any money out of that, right? This temple, church, mosque, they are serving the people. It's not for earning money, they are running that business, right? That is called non business entity. So, entity means an economic unit. It's a which may be business entity or non-business entity. So you know about that business entity and non-business entity, right? Okay. And next one is business transaction. What is business transaction? Business transaction is an economic activity of the business. See, you know that UPI transaction, right? GPay, Paytm, this all cash transaction. What is business transaction here then? See, I told you are running a electrical shop. Okay, so today you sold out some electrical item to the customer. So you earn 10,000 rupees from that. So that is one business transaction, right? You sold out something and you earn back something. So that is called business transaction. Whenever any business transaction takes place, it results in a change in the value of some of the assets, liability, or capital. See, you're running a electrical shop, right? So simply how you can run? Simply it come no, right? You have to invest some amount, right? So let's imagine you have 3 lakh rupees in your hand. From the 3 lakh rupees, you rented an electrical shop, you purchased some electrical items, and you start selling the electrical product. And you purchased some furniture to sit and computer for the recording your transaction, everything. So this all you are doing with the 3 lakh rupees. So you are invested some amount, right? That is called capital. So you are invested 3 lakh rupees and you are earning money out of that. So whenever you are doing the business transaction, you are selling the electrical item and you are getting some amount, that is called business transaction. That is increase the value of your business. So you are getting back. You are invested 3 lakhs, you are getting amount from that. So so it's increase the value of your business, no, you are getting back, you're balancing your capital. That is called business transaction. And next one is capital. Just now I told you, know, you have 3 lakh rupees, you are invested 3 lakh rupees, you are earning. So that 3 lakh rupees is called capital. And account means what? So you are doing selling and earning money, right? So you have to record you have to note down where this product is going out, this amount is coming in. You have to record somewhere, no? Otherwise, how to know how much product I sold out, how much money I earned so far? You didn't know, right? So either you have to record in a account book or you have to record in a computer. So you are recording that ledger recording in a summarized form. That is called account. So how many product I sold out, how many cash come in, what's going out, what's coming, you have to note down. That is called account. And event is the consequences and result of transaction. See, end of the month or end of the year, how much business transaction I did, how much electrical item I sold out, how much cash I got back. So end of the month you are seeing the result. That is called event. So if it is a big company means you have to show that result to your board members, your stakeholders. That is called event. So it's a event is a consequence and result of the transaction. Next one is drawings. See, drawings is the owner personal use. The owner is taking some amount from their business. See, you are running a shop, so by evening you need 2000 rupees from your shop. Okay, you don't have money in your hand. So today transaction happened 10,000 rupees. Okay, so you are getting 2000 rupees for your personal use. That is called drawings. Okay, it may be a medical emergency or you are going some function, immediately you need money. So you are getting taking that 2000 rupees from your electrical shop. That is called drawings. So you have to note down this 2000 rupees. Otherwise, where this 2000 gone, which product I sold out, you may get a confusion. So my cash or value of good withdrawn by the owner for personal use or any private payments made out of business funds are called drawings. Personal use or any private payment you are using that your business amount, no, what are the profit you are getting, you are taking, no, that is called drawings. And second one is liability. So liability equal to asset minus capital. So this formula will come I will teach you later. So here it refers to the amount which the firm owes to the outsider, expecting the amount owed to the property. See, you invested 3 lakh rupees in your electrical shop, right? So but you feel some more item I need to buy to improve my shop. See, so you are lending 2 lakhs rupees from outside, from money lenders or from bank. You are borrowing 2 lakhs rupees. That is called liability. So you borrow 2 lakh rupees and you invested in your electrical shop. Again, you are making some digital board in your electrical shop. You are decorating with some lights because customers come to know there is a shop here. We can go and buy all electrical item here, right? So you are doing some advertisement things. So you invested 2 more lakhs there, but you don't have 2 more lakhs. So you borrow from outsiders. That is called a liability, no? So you have to repay the amount. You have to sell the product, you have to earn money, and you have to repay the amount. So that 2 lakhs rupees is liability. And next, liabilities may be divided into two parts. What are the parts? Internal liability and external liability. So all amounts which a business entity has to pay to the proprietor or owner. Proprietor means owner. You are the owner. You are running a business, right? So you are the owner of the your company or your shop. So internal liabilities such as capital and accumulated profit. So you are earning you are invested 3 lakh rupees and you are getting profit. You are earning money from your electrical shop, right? So you are getting profit. You are balancing your capital. What you invest, you are getting back. That is internal liability. You are getting back for yourself. And external liability, I told you, 2 lakh rupees you borrow from outsiders. So whatever money you are getting, you have to give back that outsider also. You have to pay the amount, right? Simply you can't get it back for yourself, you have to pay some amount to outsider as well, no, that is called external liability. Yes, external liability such as creditors, bank overdrafts, bills payable, or outstanding expenses or a loan. So this all comes under external liability. And assets are future economic benefit, the rights of which are owned or controlled by an organization or individual. So you are running an electrical shop. What are the assets you have in your shop? See, you purchased so many electrical item in your shop, that is asset. And you bought some furniture in your shop, that also asset. Computer and decorative items, everything is a asset for your shop, right? That is called asset. So valued in, it has a value, right? That is called assets. And expenses is the cost incurred in producing and selling the goods and services. So you purchased some electrical item for your shop, right? You spend some money. So you are invested 3 lakhs, not all the 3 lakhs, not for the only for electrical item. For 2 lakhs, you purchased electrical item for your shop, right? So that 2 lakhs is expenses for producing and selling the goods. Only for the product, you spend some amount. That is called expenses. And income is different from revenue. Amount received from the sale of good is called revenue. See, so you are selling your electrical item day to day basis, you are getting some money, that is called revenue. Okay, so your expenses is 2 lakh rupees, you purchased some electrical item with 2 lakh rupees, and you are selling daily basis and you are earning some revenue. So day to day basis you are getting some amount, that is called revenue. So expense minus revenue equal to income. See, for example, you are earning every day 10,000, one day 20,000, one day 25,000. So every day one revenue you are getting. So the end of the month, you are calculating all expenses and all revenue. Finally, you are getting some amount, that is called income. Surplus of revenue over expenses is called income. For example, see, today, you sold 10 decorative lamp light from your shop. Okay, that cost around 30,000. You sold. Okay, so the original cost you bought for 20,000. So how much revenue you got today is 10,000. So 10,000, sorry, how much income is 10,000. So you sold out 30,000, you purchased 20,000, but you are sold out with the amount of 30,000. Okay, so 30,000 is your revenue. So 30 minus 20,000 equal 10,000 is your income. Hope you understand. I think, see, one more time I repeat. See, you sold out the electrical product today for the amount of 30,000. Okay, so for how much you spend for that electrical item when you purchase, no, you purchased for 20,000, but you sold out 30,000. So what is the expense here? Expense is 20,000, revenue is 30,000. So 30 minus 20 equal 10,000. That is called your income. So profit is the excess of total revenue over total expenses. A profit is either end of the month or end of the year. You are calculating the total revenue and total expenses, and you are uh, finding that end result. No, that is called profit. So total revenue minus total expenses equal to, you will get the profit amount. And loss, it's a convey that there's a, maybe you may face a loss. So lot of electrical item you are not selling, or maybe a lot of competition, it's not, product is not moving, or otherwise you may face any damaged item that may cause you loss. And gain, it's a monetary benefit Profit or advantage result from the events or transaction which are not operating activities. See, it's not included in your business. Apart from business, you are getting some money that is called gain. See, you bought a computer for your shop, okay, for register, record your account transaction, everything. You bought a computer, but after some time you feel, so instead of computer, I would have bought a laptop. So what you did know, you just sold out your computer and you bought a laptop. But you sold the computer, you bought 30,000 and you sold out 40,000. So 10,000 is the gain for you, right? So that is called gain. It's not involving in the business. You are not selling electrical item, you are not doing anything. You just sold out your computer and you got a amount 10,000 more. The 10,000 is gain. So hope you understand this concept very well. I think so. So try to recollect the concept as much as you can. Whether you understand or not understand, this words, no, may keep it in your recollect in your mind every time. The business entity, non-business entity, business transaction, capital, account, event, drawings, liabilities, asset minus capital, mm, internal liabilities, external liabilities, assets, expenses, income, revenue, expenses, profit, loss, and gain. So these small words you just recollect in your mind frequently, then you will understand very well what is the concept is telling, and you will come to know when you recollect this word itself. You will come to know. Okay. So thanks for watching. I will come up with part 2 video with another basic terms in accountancy. Okay. Thanks for watching.